G'day there. Welcome to the closing bell on the 6th of September for me on the Friday afternoon. And after a week in bed, coughing and spluttering away, I'm coming good and seeing a market that I think is looking a little sketchy. And I think the risk is to the downside in the short term. So I've got a lot to get through today. The case I want to make for you is that despite the fact, stocks such as the S&P in a long-term uptrend, and actually need to fall a long way before any sort of bearish picture could emerge in the, on the monthly chart and that sort of thing. So, big picture still looking bullish, but I just want to make the case that short term, it's looking like the risk is to the downside. So that's, I guess, the major part of what I want to say today. And I want to make the case by looking at oil prices, iron ore and copper, which you've probably heard have been under pressure. I want to show you those charts and make the case that, look, the Chinese property market may be doing worse than it's even people are saying. Is there a Chinese hard landing on the way? Maybe these commodity markets are really hinting at that right now. And there's also the S&P. We've got employment figures for you last night, but in tonight for me. So I don't know what they were. You'll know more than me. We could have had a big move in the markets overnight. I don't know. But I'll just show you what the setup looks like. If those employment figures were bad, it could have sparked a really big move in stocks to the downside, I would imagine. But it could go either way, couldn't it, with that data? So a lot to get through. I'll try to race through it and not bore you to tears. So looking at the oil price, and we've looked at this before. I was making noises that, it could look good if it rallied above what I said was that, $95 level. So this is a monthly chart of the Brent crude oil price. This is going back to, 1990. This is a massive run that happened into 2008 before a crash. And I'm just analyzing all the price action since based on that, with a midpoint around $78.50, which is where prices have been oscillating around for the past year or so. And we've got the sort of buy and sell zones of that whole range, which has seen many instances of prices sort of crashing down into that buy zone area and finding support, with prices moving back to the midpoint, and also rallying up into the sell zone area and then finding resistance, as we've just seen over the last few years. So lots of work done, and it was, oscillating around that midpoint. The big question was, can it hold at this midpoint and then find the buying pressure again? And I was saying in the past, if it could get above that $95 region, it's going to look quite bullish. But you need to wait until it does that, because if it can't do that and it breaks below the low, then watch out. So you can see that for the last year, it's really been struggling. Growth now coming off the boil, problems in China. I think it makes sense what's going on. But it's just recently really started to sell off towards that major low from the last few years. So it really is on the cusp of potentially surprising to the downside with a bit of a panicked move. Now that may be it, and then, turns back up again. Fine. But just looking at where oil prices are right now, they are looking a little dangerous to me, because what it's saying is that the point of control, that midpoint, isn't holding. You see in the past, it was resistance. And, when it breaks through it, it can really crash. Did a lot of work there for a while, then broke out to the upside. So it is just in a bit of an area of no man's land below there, wondering what will happen. And it could see a clear out of positions that were created, long positions that were created. If we go in here, prices have been trading above there for the past couple of years. So there's going to be a lot of stop losses set below there. So you could imagine that really getting hammered. So oil prices looking a bit dangerous just for the short term. I think long term, that will ultimately set up a good buying opportunity. I mean, worst case scenario, going back to the buy zone again and doing some sort of reversal, as we've seen so many times in the past. Back up your truck if that happens. But just the short term looking pretty dangerous. And iron ore, you'll remember if you've been paying attention, back in, I think, May, gave that strong warning on iron ore that it was possibly going to be ready for a pretty serious move to the downside. And it's now heading down towards 90 bucks. Even further falls could be expected. So at the moment, it is in a primary wave on the downtrend. If we're looking at this down wave, correction, down wave, correction, and now we're in this down wave, the next wave down. So does it even breach those lows from a few years ago? At the moment, I'd say that's a pretty good bet. So, that's a huge earnings for Australia, isn't it? BHP, Rio, Fortescue really coming off the boil. I gave you warnings when they were much higher. And it really is sort of coming to pass, long-term downtrend now and testing the lows. That's the hint that, things really are problematic in China. And we've also got copper in the same boat. Of oil, and iron ore and copper, obviously copper is the most bullish of the lot, still in long-term uptrend, has recently tested the all-time high. So I'm still looking at this sell-off as a buying opportunity. It's just how far down does it need to go before it's ready to turn up? And I think buying on the back foot is probably the way to go. But there is, inventories heading higher in China. There is some problems which are behind the falls that we're seeing. So just in the short term, on that monthly chart, you can see monthly sell pivot there. So it is marching down at the moment. So potentially you're waiting, wait for a monthly buy pivot before I get too excited. And, allow the potential that it could actually sell off further. So still the jury's out. I think copper the most bullish of the lot, and I'm waiting for a buy signal on it. But I'm just wondering, does it need to have some sort of final clear out before taking off again? That's what I'd sort of imagine. So it may do something like that, and you don't want to get caught in the panic, I guess. So still really like copper. I think it's going to be a great opportunity if we do get a leg down here in the next sort of few months, on the back of a weak China story, etc. US growth coming off the boil. I think this downward cycle will be a buying opportunity long term for copper. We just need to manage it well, so that you aren't sort of buying too early and then having to suffer a lot of pain before it finally comes alive again. So just a little bit wary on that front that things are showing up in those really big commodities as being quite weak, saying that, that there is rumblings that in China the situation is not fabulous. And does that hard landing happen? Well, how does that affect demand worldwide, and etc. So also in the US, though, data is coming off the boil. I'll be very interested to see what those employment figures are, although they did massage them a bit. They've just done a big adjustment recently, you'll know, saying that employment was actually a lot weaker than they had been saying. So yes, it'll definitely be an important figure tonight, and how stocks react will be important. So let's jump to the S&P 500 quickly. So this is the S&P 500 on a weekly chart since, the start of the rally in 2009. And the case I want to make for you right now is that the odds that the current selling pressure we're seeing, and remember, when you see really long-term charts, what we're seeing at the moment seems like a little blip, doesn't it? That was the sell-off on the Japanese carry trade sort of problem, Nikkei getting hammered 10%, etc., etc. Then we've had the recovery bounce, and now we're starting to see some selling pressure. And the weekly trend is still up, monthly trend still up. That all of those things are still up. So it's like we need to see more data before we can say, the weekly trend's down and things have changed. So this is why I've got the weekly chart up for you, just so you can see on the weekly when the weekly trend turns down, it can be a pretty good sign. In this whole rally over the past 14 years, when you've got the weekly downtrend, that went sideways for a while. That was quite a big sell-off that happened there. That was about a year of selling. There was a little false signal there, but then that was just before absolute bashing. This was just on the 2020 crash. This was in 2022, 2023, just before the market really got hammered. So the weekly trend turning down can be, a pretty good sign that things are getting negative, but we're not even there yet. That's why what I'm saying now is, quite what you'd think is premature. So that's why I just want to make the case why I think the current selling pressure could actually continue, and that there is a higher odds that we could see more of a correction from here. And the first way I want to show you is, I talk about these structures, the corrections that occur and the widening distributions that I talk about. And I explain to you how these things work, that when you look at an initial range, that being the initial range there, that there are areas outside the range where there are higher odds that you could see a reversal and prices heading back towards the range, back towards the midpoint of the range. And one of those areas is the 61.8%, which is the Fibonacci level, right? 0.618, however you want to say it. So it's a Fibonacci level outside the range where the odds increase that you could see a reversal and prices heading back towards the midpoint. So that's the theory. And I just want to show you in the past how often it's been pretty damn good at giving you a sense of where the risk is. So if we look at this first correction, here's the rally starting from after the crash. Here's the first major correction. And then I'm looking at the level. See that blue line there? That's the level that is 0.618 above the range. So the sell-off, the rally, everyone gets bullish, hits that level, 618 above, which becomes the beginning of that next correction before prices, sold off and then turn back up again. So if we carry on and I look at this correction that occurred there. So now I'm looking at prices selling off quite sharply. And then I'm looking at where prices got to after that correction. Prices rallying, working their way up to that level, 618 above the range. That was actually the beginning of quite a big sell-off from that point. If I then move along further and we were to look at a really big correction like this, and we see prices selling off, sharp correction, rally, everyone thinks, oh, that's it, it's all over, the rally's on. Where does it get to? 618 above the range. That's the 2020 COVID crash. Started from that point. So that's what I just want to give you, that sense that I'm not just sort of making things up here when I look at this correction that we've seen. And we see the big correction, and it rallies. And just to analyze this correction properly for you, here's the correction. There's the point of control, midpoint. And here's the buy zone and sell zone of that area. So you can see after the correction occurred, prices went back to the point of control, back to the buy zone twice, and back to the point of control. Rallied up into where? The sell zone. Got rejected, went back to where? The point of control, and then blasted off outside the range. So that's been the rally over this past 6-8 months. And here we are, that magical blue line, 618 level outside the range. That's why after we've seen a rally, which then got rejected, so we've already seen the first wave down, and that's why I'm a bit more confident because of the price action we've seen with that Japanese issue. And it's happening at this, major area, that 618 level above that previous major correction. So that's why I'm just thinking the odds are high that this market is going to keep slip sliding here to the downside. And if I go from that high, there's a couple of ways I can look at this, but just to give you the sense of how this sort of keeps repeating, where you see there's your initial wave down and it's rallied to where? The sell zone of that area. So that's where I'd expect to see selling pressure come in if we're going down. And we are starting to see that. So that's why I'm just going, right, I think the odds are getting pretty good here that this thing's going to keep sliding, even though it is still in weekly uptrend. So very aware of that. And with everything going on with the China sort of story and US growth slowing and rates starting to fall, I just think there is pretty good odds that this can turn into something. So really, if it busted back above those all-time highs and was rallying higher again, which is, pretty easy to do, I'd fall on the sword. And if you want to know the exact levels, I would look at that range for the week, which hasn't finished yet. Could be a lot lower by the time you're watching this. And again, I'll be looking at that level double the range above. So sort of if it gets above that sort of, 5,800, it's probably a bit higher than that. Then I'd be saying, look, I'm wrong, 5,850 in the S&P. Everything's going to be looking fine. But until it does that, I think there's a risk to the downside in this market. And that this leg down could be a bit more rapid because we've already seen that correction recently. So this next leg could be pretty good to the downside. And also remember, that whole carry trade story is still in the background. If we just jump back to the US yen. So this being the long-term US yen, that was the highest level in the US dollar against the yen since like 1987, that red dash. You can see it got there recently. Bank of Japan was intervening, trying to stop the yen collapsing and the US dollar rallying, because that's the US dollar going up, yen collapsing. And this is the yen strengthening and the US dollar going down. So they were intervening and then they decided, wow, we'd better raise rates because we can't keep intervening. And then all hell broke loose. And you'll notice that we've had a big rally in stocks, but the US yen has not been recovering and is actually near its lows at 143. So there's still pressure on this US yen. And do we see another little panic move of people unwinding carry trades? You saw the big move in NVIDIA the other day, collapsing in one day a lot more than the size of BHP in one day. Can you imagine that? So, big things afoot. do we see this yen carry trade sort of rear its head again on this next leg? And is a really bad employment figure something that really sparks a bit of a panic that things are slowing down rapidly and they're going to need to take evasive action? Who knows? So things are set up in a way that even though weekly trend up, monthly trend up, all looking fine, there's just a lot of things out there saying to me that the odds are looking pretty good that this market's going to keep sliding away in the short term. So I just thought I would let you know. All right, well, that's enough. Let's see how things pan out. I'll come back with more next week. Cheers.